the Trading Market Technicals morning call video for Thursday, October 17th. Yesterday we had a big follow-through day. Dow Jones up 205, Nasdaq up 45, S&P up 23, and the Russell up 1280. On the resolution of the debt ceiling, our congressional leaders came to the rescue once again at the last moment and put their differences aside and ended up signing the agreement. Hallelujah. Now, where do we go from here? That's going to be the big thing. Well, markets, if we recall, we were down 13 out of 15 days, and we rallied 4 out of 5 to actually make almost new highs in the S&P and the Dow Jones. So I do think the markets are a bit stretched. Now, to me, is do we sell the news? Okay, do the markets start to sell off and we take some profit taking? You know, buy the rumor, sell the news type mentality. And I am in that camp. I think that the markets just don't go straight up. I do think we had a huge move from Wednesday's low, last Wednesday's low, and now we are at resistance again. Do we push higher? We absolutely can. But I am very cautious and waiting to see what this market does. Now, I'm not looking to short the market. I'm not looking to just go out there blindly just go and start laying out shorts. However, I will be watching tick for tick to see if this market starts to roll over. We are down a little bit, 4.25 in the E-mini S&P. So we'll just see if that holds a little bit of weakness going into the opening. That weakness could be bought, but we shall see. I do see a little bit of cracks in our indicators. I'm not going to show much of it to you today, only because really not much has transpired from yesterday. But I want to show you the McClellan oscillator just to show you where we are in an overbought state. We're still in this neutral state here. So again, we could continue to move higher and plenty of room to be overbought. And of course, if the market does decide to roll over, there's plenty of room to be oversold. So one thing I want to show you here is the New York Stock Exchange new highs. We're still above zero, but we're lagging, right? We're lagging from this high here. And then again, that's a concern for me that the markets are at new highs, but stocks are not moving. They're not moving, making new highs, which that's not a good sign. And yesterday I showed you stocks above the 50-day moving average, although we are at resistance, but we're on a horizontal slanted resistance area, making lower lows and lower highs. It's similar to the New York Stock Exchange new highs, new lows. So again, this is not what I want to see. I'd like to see it back up at this area while the S&P is almost at resistance as well. So something to keep an eye on, guys. The one thing is I do like is the bullish percent financials. They are actually indeed started to move higher yesterday. Obviously, I think just about everything moved higher. All the indexes moved higher. But we do see this moving to the upside. We did kind of kiss that 8 EMA, and then we started to move higher. So again, although we have some overbought readings here, this is a good sign that at least the banks and financials are starting to wake up. So if we do get a pullback, and the next pullback is shallow, then look for the banks. I mean, I like Goldman. I mentioned Goldman. I'll show that to you in the chart segment. Goldman actually broke out of that 160 and had a 4-point move to the upside. So if you watch some of these stocks that are, holding up well on that market downturn from last week, it's something that you can really pay close attention to and identify your resistance and support areas. You can make a lot of money when this market, when the markets do move to the upside. Now, VIX coming into a 200-day moving average, so we are coming into support here. So this interesting to see if the markets the VIX starts to bounce, then that would obviously put some pressure on equities and take some profit taking out of the market here. But again, we shall see. Right now we are at support, and again, the VIX is going to need to do something today to identify which way we're headed. If we are headed higher in the equities, then we should break and obviously test these lows again. And again, we are way away from the Bollinger Band, so again, not really much to tell me anything other than that we are at support, and we could bounce from here. So that's what we'll look at for today. All right, chart segment real quick. Want to show you, as you can see here, 15 out of 13 days down, and all of a sudden, boom, 4 out of 5 days up, already almost challenging the highs. A little bit crazy, but again, this market is nuts, and if you are not accustomed to trading this type of market, I would go very, very slow and just take a step back here. But again, we are almost challenging the highs. I think the markets are due for a little bit of a breather. And again, remember, the markets are made to fool the masses. So when the markets are up this high, this fast, within 5 out of 4 days, and it took 13 out of 15 days to get to this point. Be a little careful here, because remember, we buy the rumor and we sell the news. And so now that the debt issue is behind us, let's say, what's the next catalyst to move us higher? And if it's the Santa Claus rally, well, this needs to take a little bit of a breather. Even if it gets to the 20-day moving average, or back to this fib cluster here where we were, that would be a good area. And again, we would still make a higher low from these 3 lows. That's a good sign. As long as we don't take this pivotal low out here, from 10.9, the markets are in good shape in the longer term to move higher and probably take out the highs and close higher into the new year, going into the end of the year, beginning of the new year. Let's take a look at the Qs. Qs actually took out the highs, so Nasdaq's been doing quite well. Selective Nasdaq stocks are doing quite well. Remember that, okay? We're not looking at we're looking at the index as a whole, but within the index, there's only a handful that are actually moving the index, and of course, one of it is Apple. All right, what I want to show you here, guys, is Apple, and as you can see here, we're up at these areas now where we're probably going to be. Our first target is going to be the 505 area. So you either tighten up your stops if you took it from the 497 break. I look to tighten stops and put stops below yesterday's low. That would be my first bet. Goldman Sachs, as you can see here, really nice. We took that 160. We shoot up 2.5 points above that. Now Goldman looks like here it broke the bearish symmetry. We had this little consolidation area, and now we took it out. So we'll see what happens today with the banks and everything. Even though if Goldman has an inside day today, that's fine. But Goldman, to me, looks like there's further upside, at least the ones to challenge the 170s. Because there's a lot of room here to the upside with very little resistance area. So maybe a small pullback into half of this candle and then another move higher in the next few days. But Goldman looks good. The banks look really good. I like that. That's going to be exactly what you need here. Look at the XLF, as you can see. XLF, big move to the upside. Almost challenging the highs here. But this is something that you want to see when the market does start to move again. Okay, now the market could use a breather. I think it's a healthy spot for markets to take a little breather here. It gives it a little bit more energy, builds up energy, and gives it enough legs to move to the upside again. Okay, so let's take a look at the transportation sector. Again, firing up on all cylinders, exactly what we want to see here. Our leaders leading, transportation sector leading quite well, and actually going to challenge the highs again. So this is exactly what we want to see. Take a look at the diamonds. Now, diamonds is still one of the followers, but doing quite well. Recouped a lot of its losses here, as you can see. So it's a little bit stretched. It could use a little bit of a break here. This is the downtrend line, one of the downtrend lines from 2012. And again, guys, we're above the 20, above the 50, above the 200 on all of the 5 indexes. So I'm holding up quite well. And again, I'd like to see a little bit of a pause, a little bit of a break, maybe a shallow pullback, making a higher low from the previous low of the October 9th low. And then we can really start to chug along and start looking for quality stocks. I would be building your list of quality long stocks, and of course some shorts. You're going to need some shorts as well, balance the portfolio out. But I will be looking for some quality longs that held up real well, and the sectors that are doing well, that money's rotating into for the next leg up. So we'd like to see a pullback so we can buy these stocks a little bit cheaper than where they are now. And of course the 5-minute S&P, as you can see here, we gapped up and we stayed up elevated pretty much all day. So we only had a good half-hour movement, and the rest of the day was stagnant all day, as you can see. And that's pretty much the theme here. That's what's been going on for the last several months. A little bit of volatility from 9:30 till about 11, and then after that, sideways consolidation pretty much most of the day. All right, guys, today is Thursday. Let's see if we get that little bit of a pullback. We're down 4.5 handles in the E-mini electronic session and the overnight session. Really nothing to talk about, but let's see if we can take out the 1695 is going to be a really an important support area here. 1695, I'll be watching that for today. If we catch that and we close on the closing basis below that, then I would see a little bit further downside of a correction, maybe to challenge last Wednesday's low, and then we would look to reevaluate it from there. All right, remember, guys, buy the rumors, sell the news. Let's see if that happens today, maybe into tomorrow. and let's see what kind of retracement we get, if at all we get any. Okay? Have a great day. Be safe out there. We'll speak to you tomorrow. Take care.